Although the market traded off today, the Dow was down 209 points, but it was well off its low, and it closed back up above the T-line. Remember the very simple trading rule of the T-line. A reversal is much better confirmed when you see a candlestick sell signal confirming with a close below the T-line. The fact that the indexes came back up and traded above the T-line produces probabilities that our reversal signals aren't telling us there's been a major change of investor sentiment, just merely profit-taking pullback. However, we still have the ability to analyze how the markets react tomorrow based upon if they open lower, that tells us we're probably still consolidating, maybe back to the 50. A bullish trade or a bullish open and bullish trading tomorrow would indicate the T-line is still acting as support. You add other indicators such as the transportation index. Note that it consolidated back to the 50 and the T-line and then traded back up to where it was off 0.2 of a point today, basically unchanged. But more important, notice that it opened here and closed above where it opened. So even though it traded flat, it told us there was buyers in the markets or in this market today based upon that it was trading above where it opened. The advantage of identifying the specific patterns created by human sentiment, such as the J-hook pattern, in our recommendation on Delphi today, even though it didn't really execute, notice the magnitude of selling that occurred in it. It was off 10 cents on the day, but once again, you can see that they opened it lower and they traded it or closed it higher in a day when the market was selling off. This is because patterns usually have the investor sentiment being built up in it, and utilizing the patterns allows the candlestick investor to have a much better safety net that the patterns are still usually going to work no matter which way the market is moving. The fry pan bottom, as illustrated in Crone, one of the weed stocks. Notice that it started with kind of a cradle pattern, and then your fry pan bottom with a J-hook pattern that broke you out into new territory. Had a strong up day. That was based upon the fact that we were identifying that we were in a fry pan bottom, and obviously this was one of the sectors today that was trading stronger. The same scenario was being applied to our recommendation on NBEV, New Age Beverage. You can see that it was in an uptrend. You could see it was forming a J-hook pattern, and it still acted well even though the market was down. The major advantage that we have with the visual analysis of candlestick signals is that we can see what's going on in investor sentiment and know what the probabilities are based upon signals and patterns performing. That'll be it. We'll see you in the chat room.